We're getting a little movement here on price. Dow's up 75. Let's get to Bob Pisani. Bob?
Yields up, baby. That's what it's all about. Yields up. Market's been going from negative to positive here. And again, the question is that rotation story. So a little bit flattish, maybe on the positive side for energy, industrials, banks. That's what's been moving recently. That's what we call that value trade. And utilities and REITs, more defensive sectors, have been lagging. Just take a look. The cyclical rally, as we've been calling it, is still fairly much intact here. So banks have been up since the end of last week. This is when the yields started moving up. Transports and energy, and what we call the defensive names that are out there, the consumer staples names and the utilities and the real estate investment trust. If you put up the next full screen, you can see have been down since Wednesday's close there. There's the move here, and that's what we've been looking for. We call this the value trade overall here. As far as what else is going on, nice to see some rotation. Nice to see small caps moving. The Russell 2000 up 2.5% this week. S&P is essentially flat on the week. Can it keep going? I don't know. I mean, obviously it depends on the trade talks and what happens with the European Central Bank tomorrow and with the Fed next week. But we've got positive momentum. We've got low volatility. The VIX is at 15. We've got high levels of pessimism. Internally, these are positive for the stock market overall. David was referencing some of the IPOs. Yes, we've had a few big recent IPOs that have been down on some disappointing earnings numbers, but we've got Smile Direct that's going to be pricing tonight on the NASDAQ. Teeth straightening. Talking about an $8 billion IPO here. We're going to have Cloudflare pricing Thursday. It'll trade down here Friday at the NYSE. Website security. These look in very good shape right now. So the IPO market is continuing to open up and do well. David mentioned the bid for the Hong Kong exchange by London. There's some very interesting geopolitical considerations going on here. So they have basically eliminated the restrictions on trading in China, the inbound trading. So the Hong Kong has got to look elsewhere for business. But this deal, if something like this happened, they would be the third biggest exchange in the world. After the New York Stock Exchange, NASDAQ, then it would be Hong Kong, LSE. They would be the big rival to the U.S. exchanges for global listings. And yes, theoretically, the Hong Kong exchange is independent of Beijing. Let's not kid ourselves. We all know what's really going on here. Obviously, the Beijing authorities blessed at least this bid being made. So China has already said they want to be a big global player in the equities business. This is the great backdoor way to do that. Obviously, the probability of this happening probably is fairly low, but there's very important geopolitical implications for that.